Welcome to Skipping Stone's Japan Energy Market Update 2023. Our speakers today will be Hiroshi Okuyama, President of Skipping Stone Japan, and Peter Weigand, Skipping Stone Chairman and CEO. With that, I'll hand it over to our speakers.
Thank you, Nancy. Hi, I'm Hiroshi Okuyama, President of Skipping Stone. Thank you for attending our Japan Power Market Annual Update for 2023. I'm happy today to speak about some basics and developments in power markets here in Japan. Let me start with the regional power market size. Okay. So, as you may know, Japan is the largest liberalized power market in the world, with 86 million customers are free to switch. China and the US are much bigger electricity markets, but they are not fully deregulated. Next, please. So there are 10 zone areas in Japan, which are divided into two large areas by frequency, East and West. East with 50 Hertz and West with 60 Hertz. Total national demand in fiscal 2022 was 822 terawatts hour, and slightly down from 837 terawatts in hour in 2021. The East annual demand was 387 terawatts hour, and West was 435. Next, please. This shows closer look at the demands by each area and by voltage. Even under fully deregulated retail market conditions, 13% of the total demand is under regulated plans or tariff. This chart doesn't tell, but even unregulated extra high voltage, and low voltage plants are still very similar to tariff model. Why? By nature, utilities can only rely on cost-based price structures, not by market-based. Also, their legacy billing systems don't support flexible price structures like other global advanced markets. But we predict this will change in coming years, as utilities will be compelled to adapt to market-based price structures with advanced billing systems. Next, please. This chart shows monthly generation and demand statistics since April 2016. Bar charts represent demand by voltage, and red line represents total generation by registered power companies. You can see supply-demand reserve margins remain tight. Next, please. It is no secret that Japan's generation is heavily reliant on natural gas and coal imports. Western Japan nuclear generators are gradually getting approval to reactivate, but still Eastern Japan faces hurdles than that of West. Peter will talk more about the renewables later, but it is known that Japan has ambitious decarbonization targets towards 2030. Next, please. Market structure. Next, please. So this chart shows the structure of power market participants. In the wholesale markets, JEPX Japan Electricity Power Exchange operates the physical as much as such spot and intraday markets and base load market to fix for the next 1 to 2 year fiscal year's deliveries. And OCTO, which stands for Organization for Cross-Regional Cooperation of Transmission Operators, is responsible for coordinating 10 regional system operators in order not to have blackouts and to secure nationwide long-term electricity supplies. Next, please. This is the high-level ecosystem map of Japanese power market. As you see, actor sits in the center of the system and deals with entities with different power-related functions and roles. Next, please. Key market rules. Next, please. Let's see how the Japanese power market developed. The liberalization started in 2003 with opening of JEPX and kept growing and saw the first inflows of international retailers triggered by the full retail deregulation in 2016. But in 2021 and 22, the wholesale market experienced extreme price hikes and due to unexpected cold weather and followed by Russian-Ukraine crisis. Many domestic retailers stopped expanding because of lack of risk management skills, and internationals also exited because Japanese futures markets were still in infancy back then. I will come back about this later, but we expect more consolidations, and while more experienced international power trading companies and retailers will be eroding as the opportunities in Japan are growing. Next, please. Let's talk more about JEPX. JEPX is the main physical power wholesale exchange, and its 30 minutes ahead is actively traded. Each 30 minutes finds cold system price for the whole nation, but if there are breaks due to congestions, there could be different non-UTT area prices, except for Okinawa. Same-day market is available until 1 hour before the delivery time. Any uncovered balance after the same-day market will be subject to imbalance fees. Currently, one of the hottest topics among the regulators and industry is about structuring simultaneous market. This means under the simultaneous market structure, the balancing capacity market factors will be built into spot and same-day markets, since currently those markets are separated and they are criticized for its inefficiencies. But it is expected to take more than 3 to 4 years to implement in order to solve many issues, including system upgrades and rulemaking. Next, please. Octo, which is the only ISO, again, in Japan, and responsible for securing power supplies and transmissions nationwide from very short term to longer term. In addition to capacity market, which started 3 years ago, it is adding a new market called long-term decarbonization power resource market from January 2024 to support the investment on various power resources to be available. Next, please. This is the historical prices of the capacity market auctions. The first auction 3 years ago, or for the year of 2024, priced so high as over 14,000 yen per kilowatt hour that drew lots of criticism. The second auction results came down dramatically to 30% or 20% level of the first auction. But third auction, which is for year 2026, held last year, bounced back more than 50% from the previous year level. In general, Hokkaido and Kyushu tend to be more expensive than other regions. Next, please. wholesale market. There are again three physical wholesale market venues: Octo, JEPX, and EPRX. I already talked about Octo and JPX. EPRX standing for Electricity Power Reserve Exchange, which is basically balancing and ancillary markets run by UTT TSOs. So far, 45 minutes and 15 minutes response time balancing markets are traded. I'll come back about this later. Next, please. Futures market. There are two active futures market venues for Japan Power. One is Japanese Domestic Exchange, Tokyo Commodity Exchange, called TOCOM, under Japan Exchange Group. And the other is EX, European Exchange, European Energy Exchange, under Deutsche Börse. Both list the same Tokyo or East and Kansai or West, base load and peak load. EEX added daily contract to its variety of contract terms in this past spring. TOCOM is adding weekly contracts to its existing 24 consecutive monthly contracts next spring. Next, please. This is JEPX spot market historical monthly volume and monthly average price. In the fiscal year 2022, total spot volume was 319 terawatts hour, which is 39% of total national power demand in the amount of 822 terawatts hour. Year 2023 so far has been rather quiet comparing to the last couple of years. Next, please. This is a comparison of historical daily volumes of spot and same-day markets since the inception. Same-day market has been less liquid, but we expect more volumes and liquidity in the same-day market as more international energy companies and international short-term algo-type trading companies are starting operation here in Japan. Next, please. This is Tokyo and Kansai spot area prices for the last 1.5 years. You see the last year's market raises because of the Russian crisis. But as mentioned, this year has been somewhat quiet for both areas comparing it to the last year. Kansai is generally cheaper than Tokyo as more nuclears receiving approval to reactivate its operation. Next, please. This is sample intraday price chart of a same-day market. I took from October 23rd. It shows the curve even late October. Blue line is spot system price, and the candlestick is for the same-day market. You can see same-day price hit 0.01 yen, almost zero, during the day, and in the same time, 30 minutes window traded more than 10 yen or 15 yen. JPX does not publish each area's same-day market price separately. That means this intraday open, high-low, and close prices include all areas' prices in the same 30 minutes window, which then means 0.0 yen, 1 yen could be for Kyushu, and 10 yen could be for the Tokyo in the same time slot. Next, please. This is a spot price comparison for the same time of the period of the year between 2022 and 23, from April 1st to the end of September. East prices on the left and west price on the right. Blue are the last year's and oranges for this year. Again, you can see this year has been a little bit quiet because it is said that last year, in the midst of Russian upheaval, many retailers rushed to fix annual procurement by bilateral contracts for this year. That made less demand procuring on the spot in 2023 so far. Next, please. This is historical price charts for baseload market of JPX for different areas. The volume for the most recent auctions for fiscal 2024 were very low so far. It is said that retailers have not yet dared to pay the prices offered by utility generations at the generation cost, which is mandatory by the regulator. But this may change in coming auctions when it's getting close to the next fiscal year. Next, please. This is a logical diagram how the imbalance fees are calculated, modified in April last year. He adapted the price mechanism of balancing markets and ancillary markets into calculating imbalance fee, and also spot and intraday market prices are also built into. The most recent news was that regulator decided to keep the cap of the imbalance fees at 200 yen kWh, which initially was planned to move up to 600 yen from the next fiscal year. But again, it was decided to keep the cap for a while at 200 yen. Next, please. This is the details of the balancing and ancillary markets at EPRX. The news is that they decided that finally the ancillary capacity with less than 10 seconds response time frequency will start April 2024 at the same time with the 5 minutes response frequency restoration markets. Next, please. This shows monthly volumes and open interest of Japanese power futures combining TOCOM and EX. 3-month average monthly volume have come down since this spring, but the open interest start piling up to almost 10 terawatts hour as of the end of September. Because the retailers and generators start hedging operation for the next fiscal year for establishing their fiscal budgets. Next, please. And let's talk about retail markets. Okay. The most recent topics for retail market in Japan are more lame duck domestic retailers. UTT retailers made huge losses last year, and some are looking for better risk management solutions and skills. METI is raising hurdles for new retail license applicants and its qualification. Even majority of the retail price plans UTT mimic, but some started to offer market-based plans, and this trend is expected to grow. Next, please. This is the results from our sample survey made to retailers. This survey question was, what kind of market-based price plan if it is to offer? 29% of retail respondents said they would offer a spot market pass-through to their customers, and 57% did not have decided yet or no idea. It is noted that not only general retail customers, but customers of UTT retailers who are cut off from the limited number of tariff model price plan have no choice rather than selecting the spot market pass-through plan, even with UTT retailers. Next, please. On the other hand, for the customer side, most of the customers prefer fixed price plans or similar. Some international retailers who had exited Japanese retail business due to lack of hedging venues some years ago considering to come back, as they may be able to offer fixed or hedged plans, as futures and other OTC markets are getting bigger and much more liquid than before. Next, please. This is my last slide. This is our observation and predictions for the retail market in coming years. Like other advanced markets, as mentioned, Japan had large number of entrants to power retail market at the start of full deregulation. But as we witnessed, the volatilities and competitions made the business difficult for those who weren't ready and did not change their business models, nor had proper risk management schemes. We predict the number of active retail will keep shrinking as consolidation from mergers that exist. However, at the same time, a more new international retail entrants and re-entrants are expected, as the market conditions are getting much better for companies who have experience and skills in advanced overseas markets. This is all updates from me. Thank you for watching. See you in the Q&A session. To you, Peter.
Thanks, Hiroshi. What Hiroshi covered in short order is something we do, how the market rules work in excruciating detail in English, because one of the things we find is companies that are researching Japan struggle to find the details you need, because we all know the devils are in the detail. So we've got more information you could possibly ever read about how Japan works on retail, wholesale, trading, renewables, you name it, we have it. But I'm going to limit myself a little bit to working on just these topics. So let's start with the renewables market, because that's where all the action is for the generation side. So next slide. Again. So this one, I wanted to start with this slide because the government is MIDI and Diet, their Senate, or whatever you want to call it, the Diet, are very involved in energy policy, and they make, in Japan, when the government or the METI comes out with rulings or plans like this, unlike most other countries in the world, businesses and energy companies adapt their business to meet the government plans. So one thing I want to show on this slide is over on the left side, offshore wind and solar are the #1 thing the government's focused on. Hydrogen we'll talk about, next generation stuff, and nuclear is a hot topic. So the other stuff to the right of that, interesting, not something we're that involved in. Next slide. So one of the things that, I mean, Hiroshi talked about this early on the left side, you have, well, this side, it shows what they're targeting, the government's targeting for 2030. So LNG at 27% is down 10% from what it is today in the next 6 years. That's a lot. Coal is even more reduced going forward, and oil is planned to be eliminated altogether. Nuclear currently is only like 10%. So you can see the shift is turn the nuclears back on. If you read anything about Japan Energy, you're aware of that debate. The prime minister is all in on it. And what's interesting is about that is 10 years ago, after Fukushima, I think the citizens would have voted 95% to 0 or to 5 to have no nuclears at all because they turned them all off. Now they realize that the volatility of not having that reserve and steady supply of what amounts to non-emitting nuclear is really valuable. So now the push is to get it back on. And they're extending the lives of some of the 40-year-old ones another 20 years. But over on the right side of that is the split of what they plan for new or renewable generation. Hydro is really already there. There's not really much growth in hydro. The growth is really wind and solar PV, if you will. Biomass is pretty much flattened out. There's some growth there, but not as much. And this 2% you show in wind doesn't include the offshore, which we're talking about next. Next. So offshore wind is a hot thing in Japan. The government is auctioning off, as you can see, all these different sites over the next several years. The first auction was won by one company, which they forced them to change all the rules. The second auction was just completed in June. They have not announced the results yet. We think maybe next month. METI is a little bit slow in that regard. You won't see the first megawatt from the first auction any sooner than 2030, which is why it's not in the previous slide numbers. But they have huge expectations for offshore. If you look at the bottom, 10 gigawatts by 2030, 90 by 2050, very, very ambitious targets, especially when transmission, which has been planned, but it hasn't been built. So that's a huge bet that you can get transmission in before all that happens. But even within that, if you can see up at the very top of the map, which is the Hokkaido area, a lot of the wind is coming in over on that side, much less so on the right side of that picture, which is where Tokyo and the rest of that is. So with that much wind coming into Hokkaido, which is a very low demand area, once you get these charts later, you can look at what Hokkaido does. So what government's done is created I'll call it a renewable industrial hub in that area where they're trying to promote data centers, chip manufacturers, big users of generation to move to or build factories or facilities in that area to soak up this wind, because there's just not going to be enough transmission to take it to Tokyo or to Osaka, where the big major populations areas are. Next. So this is the Octo transmission plan, of which they've got 45 or 50 billion allocated for, but allocated is not actual money. So they have two goals with transmission. There's not really much transmission between utilities, because over the many years of each utility kind of acted as its own little island, built their own generation, their own distribution to feed their own customers, but not a whole lot of exchanging between utilities. They want to change that. And then the new high voltage lines for renewables. Funding is the big issue. That's something we're working on with METI. Utilities have no incentive whatsoever to build transmission. About 2 years ago, they moved the utilities to what's known as a revenue cap. So making more money isn't really an option, and investing in transmission when they don't need the power themselves. So the utilities are not all that wound up on building transmission. The government doesn't really have the money. So what they're talking about, the most recent meeting, which was a couple of weeks back, is generators will have to pay, but if they do, it'll kill the projects. They've already proven that over the number of years. When they up the price, renewables doesn't make sense. So what they're considering now is adding a surcharge, like they do a surcharge for renewable to pay for a feed-in tariff, to the customer bill to pay for all this transmission. We're also in discussions though about we have introduced in Japan the idea of private or merchant transmission, which is fairly popular in the US market. So that's what's going on in transmission. There's a lot of ifs and maybes in transmission. Next. So back April, which is fiscal year ends March 31st, April of 2021, they changed the model from feed-in tariff where the utility is required to buy the renewables generated by developers at a MEDI approved rate for a number of years. Made it really easy for developers. If you won the FIT auction to build, you pretty well had it easy because the off-taker was the utility at a price. Under the feed-in premium, the utility no longer has to buy the renewables, and instead you get a premium set by MEDI to offset the difference, but it's tied to the JEPEX spot market. So you do get a premium for the generation, but you no longer have a guaranteed off-taker. Next. So the challenges / opportunities, we've just talked about transmission. Even now, a utility scale onshore can take 3 to 7 years to get transmission access. So you're seeing a shift to less than 1 megawatt or 1 megawatt or less solar, because you can tie it into distribution and get access that way. So you're seeing a big shift to try to build those. Onshore solar and onshore wind are growing much slower than they have over the last decade. Project finance is an issue. Under FIT, it was easy. You got the utility dictated by a utility MEDI dictated price. Under feed-in premium, you have the underlying JEPEX volatility, so it's not nearly as sure what you're going to get. And there's no current market for long-term hedging. Maybe we'll see that. I think that's going to be a while. Liquidity in the real futures has to get better first. So in the off-taker market, the corporates are just now waking up to PPAs and VPPAs. The education is way behind. Even the retailers who would be delivering this don't quite understand it yet. But this is growing pretty rapidly. We did a webinar on this topic about 6-7 months ago in Japan. Huge attendance by the corporates who want to understand how this works. You're seeing a trickling of announcements, but not really the uptake we expect to see in the next several years. Next. Batteries, or BESS, as everybody calls it. So Japan, at the bottom of this, before I get into the text, already has a duck curve problem. If you go back to slide 25, which you can do when we get done with talking about this, you can see that the prices in the early afternoon, just like in other markets in the world, get to near zero. There's discussion in Japan of having it go below zero, but we don't expect that to happen anytime in the near future, which it should happen, but it won't, mostly because the utility generators who are required to buy feed-in tariff at a premium price, and their fossil generation would also go to zero. So the utilities don't understand the benefit of below zero pricing, so they are completely resisting below zero, and they have a lot of clout, as you can imagine, at MEDI. But this revenue stack opportunity, the arbitrage opportunity of storing in the early afternoon and selling it in the later early evening hours works very well in Japan. We can see on the bottom right chart the expectation of growth is significant, and a lot of this is due to LNG differential. Next. So the balancing market, which Hiroshi talked a little bit about, which starts in earnest next year, you have new revenue stacks for storage coming into play. Hard to predict today what the yen value of that is, but you can see how different storage, is the 3-hour storage minimum, can play in those markets. Everywhere from 10 second to 3-hour. So that'll be a new revenue stack, which will help finance or justify batteries after next April. I think that will be, we've seen a number of companies pretty anxious to build more batteries. And I think this is going to be one of those early bird gets the worm kind of things, because once batteries get overbuilt, the arbitrage starts disappearing. But that's going to be, I'm guessing, at least 7 to 10 years. Next. So capital costs vary because of the supply chain, labor, location, land availability. We're starting to see much more not my backyard or NIMBY resistance, not just for batteries, but also for renewable development. Long lead times to get transmission. We're involved in a particular project that's already gotten, we're beyond 3 years already. Wholesale markets, we talked a little bit about arbitrage decreasing. Not every utility has arbitrage opportunities. Some are going to be pretty obvious as more and more offshore wind comes into Hokkaido. Hokkaido will be an obvious. TEPCO and Kansai are obvious. Kyushu's obvious. The revenue stack, hard to predict because the balancing market's just starting. And in regulatory risk, METI basically controls the energy market, and they're pretty hands-on about it all. So that's why ourselves and many others get involved in trying to lobby METI to do certain things. Next. Hydrogen. Hot topic. Japan really wants to be number one in hydrogen, but they have their green growth strategic plan is passed. They plan to produce 3 million tons domestically and 20 million tons by 2050. That's going to be a real challenge to do. There very little equipment or assets to do that. A lot of talk, a lot of companies looking into this. They're subsidizing it like crazy. We'll talk about that in a minute. So there's a ton of subsidy money by the government to get hydrogen off the ground. They're building ships. They're changing ports. I'm sure you've probably heard about imports of ammonia from Australia to convert. So this target, they target to be competitive by 2030. I think that's a nice dream. The cost of hydrogen without subsidies just has yet to pencil. They're procuring by 2030 300,000 tons of hydrogen. We'll see whether they can achieve this. Some companies are behind it. Toyota has announced they're going to build hydrogen stations for cars. We know some of the fuel cell companies are having some early success getting interest, and some of the manufacturing in Japan is moving towards this. But it's kind of, to me, hydrogen is all based on how much money the government wants to keep subsidizing to get it over the hump to make it commercially viable. We'll see. Next. So in hydrogen, if you're interested in it, there's 4 organizations that are pretty heavily involved with a lot of different companies. So you can see those listed here. And then you can see the different sources of subsidy incentive money from the government. Green bonds is also becoming very popular. In Japan, unlike most countries whose interest rates have risen into the 5% and north, is still loaning money out at 2%. So money is still cheap in Japan. Next. I'm going to go through this piece by piece. No, I'm kidding. That would take the rest of the whole session. This is a very there's 2 things I want to point out. One, this is a very classic Japanese PowerPoint slide where it is so busy, you literally have to study each slide for 20 minutes to figure out what it's trying to tell you. So the point of this is they have a plan to reach all these goals that I just talked about, and this is one of the slides in the MEDI plan. You can go online and pick it out, the rest, but you can see where the 10 million, 20 million tons comes from. I circled it in red, but this is the MEDI plan for hydrogen. Next. Trends and opportunities. So we've seen several international trading companies enter the Japan physical market. We know there's more trading, especially EEX. It's pretty easy to do. But the interest level from international traders keeps growing. A few weeks back in Japan, Tokyo, there was Power Trading Week. 350 people from 80 countries attended a whole variety of events. We held some events, many others did as well. A year ago, October, about 150 people came to that Power Week. It was the first one. So the interest by the trading community is obvious. It's pretty easy to tell when you look at the numbers and dig into it that the arbitrage alone on just playing spot is there to make some money. So there's 4 utilities in the process of breaking retail and generation into separate units. So when the market deregulated in 2016 and they forced the utilities to separate transmission distribution, MEDI suggested they also separate the generation and retail units, but only TEPCOs did that. But 4 of them got caught in collusion, which basically said, we only sell to our own customers, we only sell tariff, we don't sell bilateral, we don't sell anything else. So they got fined a huge amount of money, and they're being pushed to separate generation and put generation into the market, which is one of the differences in Japan. Even with JEPIX at 40% of the spot market, it's not a clearing market, it's an auction market. So many other, like US markets and some others, are clearing markets where all generation bids in and all demand bids in. That's not Japan. But we're seeing 4 of these utilities are going to break these into separate units and are getting pretty interested in trading, optimizing their generation portfolio, procurement, etc. That will make a big difference in liquidity because they're playing around with futures, but they're not big in it yet, but they will be. Renewable developers need off-takers. Surprise. That's an obvious growth area and trend. Commercial industrials have woken up to the need to hedge because the volatility of the last couple of years has hurt many of them. So this shift from utility pricing, which is basic cost, fuel cost adjustment and plus cost, and it's a monthly variable price. You're starting to see a lot more of them want fixed price, block index, all the things you see everywhere else in the world. Hiroshi talked a little bit about that in the survey we did. And then the government continues to pour money over transition, whether that's offshore, batteries, EV charging, you name it. So there's a lot of subsidy money if you're in Japan and you have a Japanese company and or partner. There's a lot of money to get as subsidies rolling around. Next. So Japan is still, it's not new anymore, but I'll use a baseball analogy. Where most other markets in the world are in their, late innings of the game, very mature, retail is mature, trading, the margins are really thin, etc. Japan is more like in the 2nd or 3rd inning. There's still a lot of change to happen. There's still a lot of opportunities to see. I only list 10 that I think are the top 10, not in particular order. Trading, it's pretty obvious. Retail, where retail shrunk, and we know the international companies that had come to Japan, there were like 7 of those we brought in, either left or sold their business in Japan. And again, that was Hiroshi talked a little bit about that, because they couldn't offer, fixed price or block index or what have you, because there was no liquidity in futures. there is now, and there's more bilateral supply to get. There's more trading partners to work with. So we definitely see retail making a comeback, especially because of most all of the existing retailers, not counting utility, the competitive retailers, are in what I call limbo. They don't have a system that can do block index, fixed price, what have you. Their billing systems are outdated. They don't really know how to hedge appropriately. They don't really know how to do matrix pricing or custom pricing in a quick way. So I think we've identified only like eight to 10 retailers already shifting to be able to do that. Most of the rest of them aren't taking on new customers. They're just kind of in limbo. So it's a good time to come in for that one. That leads right to the software, analytics, risk systems, billing systems, all shifting to where market-based pricing, use of futures, hedging, all the tools you see everywhere else in the world are now in vogue in Japan. It's early. Personally, I think it's the market needed to see the volatility of the last couple of years to have the wake-up call. So you had retailers leave that probably shouldn't have been in the business in the first place. Utilities lost a pile of money because they didn't know how to manage their portfolio or hedge or anything. Now they get it, but they don't have the tools. Batteries we talked about, renewables we talked about, transmission, huge opportunity there. I personally think for those that are in the funding business, whether that from infrastructure funds that have piles of cash, Japan should be pretty interesting. Hydrogen, as long as the government keeps funding it, that'll keep booming. They're pretty serious about transitioning out of the LNG market, and hydrogen seems to be their preferred answer. The C&I broker business, which is popular in UK, US, elsewhere in Europe, where advisors help end-use customers figure out how to procure energy, whether that's hedge it and manage the cost. You're starting to see that take off. The carbon markets, JPX, which gets confusing because there's GEPX, which is the spot market, and there's JPX, which is the stock market, and also owns Tocom. The JPX just launched last month, the carbon market. So, it's still early, but there'll be trading of the carbon markets is going to take off in the next few years. Then I think EV charging, which they're pretty far behind in building out that infrastructure, that's going to be a hot spot too. So those are my personal top 10. There's more, but that's 10. Next. Market entry. So, and this is the sort of the pitch part of the presentation. So we've been 10 years in Japan since we opened our door. We've helped. We've got a kind of a balance. We've got 24 market entry clients. These are companies we brought into Japan, and 20 Japanese clients, utilities, trading houses, renewable developers, etc. The 24 market entry clients are a nice mix: retail, trading, software, hydrogen, biomass supply, sort of across the board of where opportunities lie. And other than the retailers who did exit because of the volatility and inability to do hedging, if you will, having left, pretty much all the rest of them are still there and doing different stages of doing well. So that's nice to see from somebody that helps bring them that they do well. You want them to be successful. So amongst the Japan clients is also diverse. Utilities, both of the futures markets are clients, MEDI, the renewable developers, finance companies, etc. So they all sort of follow a similar path for what we offer: market research, how do things work, what's the competition like, who should we partner with, you name it. It kind of covers a lot. And then what's the strategy? What do we do? How do we make more money? How do we grow? That sort of thing. And then once we figure that out, we have a variety of implementation services we provide. Next. So the different stages, planning stage, which if you're looking at coming into Japan, everybody starts with S. Everybody starts with Google and seeing what you can find out there. And everybody discovers about 10% what you want to know is available in English. And even if you do Google Translate of the Japanese material, assuming you can find it, you'll find that the way things are worded mean different things in Japan than what you think they mean in English. So we've got just a mountain of information on planning, and strategy, pro formas, budgets, you name it. Then you move into the launch stage. We can help incorporate. We can provide a local presence if needed until people are ready to launch. More seriously, we can get your memberships. We can get your licenses. We can get utility wheeling agreements if you're in the physical business. And then in the implementation stage, we can help you with your system, help you recruit people, get counterparty agreements, etc. So basically everything to get you launched and be successful in Japan is our goal. Next. So for retailer trading companies, the path is either build or buy. The build path, which basically incorporate, this is post planning and you've got approval to go. The build path, which basically is get your METI license, because whether you're a trader or you're a retailer, you need a PPS license either way. There is no wholesale license. So to build used to be about 12 months. I met with somebody in the Power Week international trading company that had decided to do this on their own. It took them about 2.5 years to get licensed. I can go into why, but maybe that's a video call offline. Then we have the buy path, where you takes much shorter amount of time, where you buy an existing shell company, we call it. It's got the licenses and the owner and the memberships, but it doesn't have any assets or employees, liabilities, etc. We've done that 7 times now, maybe a couple more coming, so that you can jump right into the enabling stage, get set up, start trading, etc. Next. So if you're trading, there's 2 options. Financial only, easy. You don't need to be in Japan. You don't need a Japan company. You can do TOCOM or EEX, either one, without being in Japan at all. But if you want to trade over-the-counter derivatives or any of that stuff, that's pretty hard to do if you're not in Japan. The physical and financial, you're required to have a Japan corporation. You need a license, we talked about. You need memberships. You need wheeling agreements, which essentially allow you to dispatch it all over the country. You need at least 1 person in Japan. Next. Keys to succeeding. Everyone starts off comparing Japan markets to other markets, because there are similarities, whether you're looking at UK, Germany, ERCOT, etc. But it's different. It's not operated the same way. So the key is, what are the differences, not how is it like Japan, but looking at it as what's different about that market than the one you're used to. So business meetings in Japan are really different than anywhere else that I've ever been. I've done business in 62 countries so far and counting. So business meetings in Japan are very different. If you're ever interested in want to come to Japan and haven't been there, we have a business guide that will give it to you for free. So while they value international ideas. So in other words, getting that first meeting with a Japanese company is pretty easy to do, mostly because they're curious about what you're up to, not that they want to do business with you. And you'll find that the sooner you adapt to the Japanese culture, the faster you'll be successful. So one of the keys is taking somebody that speaks Japanese to your meeting. If you go in only English, you'll find they'll meet with you, but you'll meet with just the people that can speak English. They're probably not decision makers. They're just there to take notes so they can tell the decision maker what the meeting was about. But the odds of you getting any business, real business done, or the next meeting are low if you don't adapt. So that leads to this next bullet. You need a bilingual representative in Japan, even if you're, even if it's a part-time person or somebody like that. You've got to have somebody, because if nothing else, if you've got MIDI memberships or Octo or licenses, those officials will communicate in Japanese and expect you to communicate back in Japanese because it is Japan. So this next one, patience. Again, having done business all over the world, Japan takes longer than everywhere else to get anything done. It's a very perfectionist kind of country, to where attention to detail is critical. So they will take longer to do anything. I'll give you a short example. To incorporate in the US could be done in about a day. You take my Visa card, go online, bang, bang, I'm incorporated. Thank you very much. Takes another maybe week to get my DUNS number and the rest of that stuff, but I'm in business. You can open my bank account, off we go. In Japan, it's about 4 weeks to get incorporated and about 3 weeks to get a bank account. And you have to physically go to the bank. And if your paperwork and incorporation is not correct, it'll get sent back to you. That's just one small example of the patience it takes to be in Japan. So then the attention to detail, that's why every filing has to be accurate, because they're big on detail. So that's what I have on keys. I think we're probably running into, we need to do Q&A. So why don't we jump to that, Nancy?
We had some questions come in, and the first one is a question on the retail market for Hiroshi. Is customer churn an issue in Japan for retailers?
Churn. What does it mean, churn?
Customers leaving to go to a competitor.
I mean, jumping off one to the other.
Yeah.
Japan, maybe not yet. I think I heard maybe Texas in US or some other developed markets in US or Europe maybe have some issues, but in Japan, I think 18% or at most 20% out of 86 million customers have switched since the full deregulation. So there's still a lot more customers available to catch or to go after. So could be maybe issues some maybe years later, but for the shorter term, no, I don't see it as an issue in Japan.
Okay, thank you. Let's see. And Peter, this one is wholesale. About how long does it take, or getting into the market actually, how long does it take to be able to start trading power?
So if you're going to just trade financials, you can do that in a matter of weeks or less, because you can become an EEX or a TOCA member in fairly short order, and off you go. So that's simple. To trade the physical market, where you're becoming a JEPEX member, you want to do bilateral, etc. Having done this a number of times with trading companies, if you go the route of buying a shell and doing it that way, we've seen it as fast as, mostly it's the planning process. If you've got a dedicated team that's actually focused on this, you can get through the planning in probably 2 months and maybe another month or so to get your approval for the budget. So that depends on your board. But let's call it 3 to 5 months to get through the planning to get a yes decision, and then another 3 to 5 months to buy the shell, get your licenses, get started, So call it, the soonest we've seen it ever done is 5 months, but generally somewhere around 8 to 10 months from planning, from start from scratch to actually be in the market. If you want to go through the application and MEDI process, add another year.
Thank you. Let's see, and can you explain how the offshore wind bidding process works?
A little bit. It's pretty detailed, but basically MEDI puts out which blocks of offshore they're putting up for bid. You get a certain amount of details as a bidder to then do your own due diligence, your own planning, and so forth. But when you submit your bid to MEDI, because it's a competitive auction, you get extra points, if you will, for two things. One is if MEDI in their bid package will tell you when they expect COD. So call it whatever, July 2031 or something. If you commit to being COD faster than that, and then they will give you points. Of course, if you don't meet that, that's an issue. Then they'll give you points also if you have an off-taker, like a corporate, or it could be a retailer or even a utility. So that's a no, you've got it placed, and then it's not going to go in all into the spot market, for example. But each bid package takes it's been taking close to a year to prepare, because you've got to go through all the economic and the due diligence goes forth. But then it takes maybe anywhere from 6 to 9 months to tell the bidders who won. So it's a very complicated process.
Okay, I have a question for Hiroshi here. Do you anticipate the spot market will continue to be volatile, or will it settle back to its previous predictable pattern?
I don't think so. Well, this year is kind of quiet because last year, as I mentioned, retailers fixed year ahead because of volatile market. But the market's now cheap, and the kind of what do you call the in English, danger path got flattened. So kind of they're lowering the defense, but the renewables coming, and they're very weather sensitive, and also still Japan relying on the imports, gas and coals, and very also sensitive to geopolitical issues. So and then as we mentioned, the more companies, retailers adapting in the market-based pricing scheme, so that will rely on the JP's price in spot market. So thing is, you wouldn't go back to as you was before. It's very JP still could be volatile, and any could happen for the markets, the conditions. Okay.
And this is another one for you. When do you think that the corporate PPAs will take off? How long?
When it's a lot of people, I mean, especially CNI customers, looking for PPA deals, and we did survey, and actually the webinar and the survey, more including about 200 CNI customers. It's about 35%, 35%. They interested in PPAs, but the deals itself have not done much yet, because still there's differences between what the developer want to sell and the customers looking for some cheaper deals. But I think that Peter mentioned about GX League, which started, and JCredit started, and GX League now have about 700 companies, large companies, and they're entitled to do some achieve the decarbonization targets. Otherwise, they'll be difficult if they face difficulties getting finance from banks. So it's any time PPA stuff flying, because to avoid the penalties, and then a lot of corporate are looking for PPAs. So, and in a few years, I think PPAs, you see the more deals coming in Japan.
Let me elaborate a little bit on what Hiroshi was saying. So the way METI is set up, the GX League with the 700 biggest companies in Japan, and the carbon market on JPX, is these companies now are required. They've been required to submit their GHG calculations, but now they're required to submit the reduction plan. If they don't meet the reduction plan, so let's say company X says we're going to reduce 5% a year between now and 2030 or whatever. If they don't meet that, then they're required to buy carbon credits. And because carbon credits are an unknown price, give it about a year when carbon market starts to actually have enough transaction to see what the future looks like. The alternative will be buy offsite renewable or PPAs, VPPAs, as opposed to carbon credits. Or if you buy more than your expected reduction, say you buy 10% or 20% renewable, you actually now can sell carbon credits. So that generates money to offset whatever the PPA cost you. So this is all new. So I agree with Hiroshi. Give it 2, maybe 3 years. You'll see all of a sudden a rush to get PPAs. Some of the conversations we've had with some of the especially American companies in Japan, they realize there's actually not enough renewable between now and 2030 to buy, because the offshore doesn't hit until then. So the supply available for feed-in premium and PPAs is actually far below the 35% of companies that say they plan to do a PPA in the next few years. So I think you're going to see all of a sudden the realization, boy, I better get in because there won't be any supply to buy. So I agree with Hiroshi. A couple of years, you'll see this take off.
Hey, we've run out of time. We have a couple more questions, but as promised, you'll get back to the people who I've got their names. You can get back to the people and let them through email, right? And answer their questions.
Yeah, email, or we're certainly happy to set up a one-on-one video call to talk about any of this stuff.
Great. Okay, well, thank you very much. We've enjoyed it, and that's the end of our webinar. Thank you.
Thanks, everybody.
Thank you. Thank you.